you've been trading for a while, you've probably felt stuck. Like no matter what you do, you keep running in circles. You put the work in, you watch the videos, you tweak your strategy, but somehow you're still not making consistent money. That's because almost every trader falls into two dangerous cycles. And if you don't break out of them, they're gonna continue draining your time, your money, and your confidence. And the first one is the learning loop, where you are stuck in research mode, constantly tweaking and never being consistent with one specific strategy. And the second one I call the self-sabotage loop, where you're now consistently executing a strategy, but you're making emotional mistakes that continuously wipe out your progress. These loops can keep you spinning for years, blowing up accounts, hesitating on good trades, and worst of all, wasting one thing you can't get back, your time. But once you understand these loops and how they work, you can break free from them. And I know this works because I've had students stuck in these exact same loops, and once they realized that, made a few key tweaks, they've been able to turn their trading around. And to help accelerate your process of breaking through these negative loops, I've put together a list of 75 essential trading lessons that I learned over my 7+ years of trading. These are the hard-earned lessons that helped me escape these cycles myself, and they can help you too. You can get it for free by clicking the link in the description or scanning this QR code. Now let's get into the meat of this and go through how these two loops work and how you can break free from them. And first, we're gonna start off with the most common loop that stops 95% of traders from even starting to become successful at trading. And I call it the learning loop, where you are just learning and tweaking your strategy so much that you never give yourself time to actually start practicing and becoming good at the strategy. The whole idea of how this loop works is, however you're learning content, probably through YouTube since you're here, is you find a new strategy and you start to learn new patterns. You learn my strategy and you start kind of practicing it. You test it out and it's not really working for you. You maybe have some success initially, in the first week or two, but over time, you're not getting those consistent results over the long term, right? And then from that point, logically, when you are learning anything in the world, it makes sense to go learn more, right? Because adding more information and learning more information usually makes you better at something. But when it comes to trading, there are infinite ways to actually trade the market. And so you are going to overload yourself with information. You actually don't need a lot of information to become successful at trading. I've always found that simpler is better. And so what most people do, and I did this myself, is I would say, this strategy just doesn't work, and let me go find a new one, or add, another indicator that helps confirm my trades that will increase my win rate. And in reality, that doesn't really work. You are essentially starting over from square one. Now, when you're starting out and you're learning new strategies, it's important to go learn a bunch of different strategies because you don't know, what works with kind of your style and how you want to trade, and you're just starting to learn. But once you kind of do that, you got to really be aware that you are going to be stuck in this cycle really, really easily if you don't stop yourself from learning more and more strategies. And so how you break out of this is committing to one strategy. Over time, what I realized was simpler was better, and I came up with kind of essentially this 30-minute reversal strategy where I only trade 60 minutes a day roughly in the morning, and I look for one specific pattern. I used to try and think, I can capture, every move in the market. Anytime the market goes up, that's a missed opportunity. Every time it goes down, that's something I should have been able to read into a pattern and figure out that the market was going to do that, and I should have been able to capture that move and make profit off of that. But instead, what I've realized over time is executing the exact same strategy and looking for a specific pattern every day and waiting for that specific pattern is way more profitable because you are waiting for the market to fit you versus trying to fit the market. And that's reactionary, and that's not a profitable way to trade. And so for me, I literally look for, this is just a bunch of pictures of charts of trades that I've taken of saying, I just look for the same thing. The market opens for me at this time, I look to see if the market has a big, move in one direction. And then I look for essentially a double bottom in the market, kind of 30 minutes after the S&P 500 opens. That's what I trade. I trade S&P 500 futures. 30 minutes after it opens, I've realized that that's kind of a timing where the market likes to reverse. And so if that lines up with the market doing a double bottom, that's a really good buy signal for me. And I just repeat that over and over. These are all different days where you can see the market opens, it spikes down, it makes essentially a double bottom. There's a nice big bullish candlestick. I buy above that big candlestick, and it fits that same pattern every day. And I wait for that same pattern. And if that pattern shows up, I take it. And if it doesn't, I just move on with the day. And it's able to be very, very repeatable and very simple. And this has helped me break out of that cycle of trying to constantly find new things, because you can see every day is slightly different. Sometimes the market spikes up and I look for a double top instead and bet the market's gonna go down. And some days it's just choppy and there's no good trade, or some days it's just sitting there and does nothing, or trends in one direction really fast and I get no trade. And that's okay. You don't need to be making money consistently every day to be a consistently profitable trader. No pattern or strategy is successful in every market condition. What you want to do is realize that what can I be successful with, and then focus and narrow down on that. Start a trading journal and start tracking your trades and essentially mastering that one strategy, because that's what's going to break you out of this loop, because otherwise you're just starting from square one all the time and you're just gonna be stuck in that cycle. And I was stuck in that cycle for years and years. And I know a ton of my students are just the same. And you gotta remember, when it comes to what the trading journey looks like, with any strategy that you start out, you're gonna start out losing money or just not making any money at all. Even with a strategy that you could be profitable with in the future, you're not gonna make money with it right away. You're gonna be losing money because you're going to need to start mastering that strategy. And also, once you break out of that learning loop and start focusing and mastering one strategy, it doesn't mean you're just gonna magically start shifting your profit graph and you're gonna go up from there. Actually, what changes your chart to becoming consistently profitable and breaks you out of, kind of slowly losing money and becoming consistently profitable with a strategy is you're then gonna get stuck in what I call the self-sabotage loop. And that's because you are going to start executing and trying to consistently match your trades. Like, for example, if you're executing my strategy every day, you see this setup, but all of a sudden, this happens and your strategy says, okay, I need to buy, but you get, scared. And instead you don't take that setup and you miss out on a profitable trade. Or you jump in too early, like somewhere down here, and the market stops you out when it makes one more push down while it's making that double bottom. And you get stopped out when the market makes one more push down, confirming that double bottom. That's when you're starting to get FOMO. And so the self-sabotage loop comes from your emotions and you negatively impacting your ability to consistently, properly execute this strategy. What allows you to turn your profit graph to consistently making money is learning how to actually manage how your emotions negatively impact your trading. Everyone is slightly different. They have different emotions that will control their trading more. But the idea is, you have either greed that makes you, jump into a trade too early, take a loss, and that messes up how your strategy is actually supposed to work. Or you have fear of getting in a trade, and so you miss out on a profitable trade, affecting the results of how your trading strategy should actually work. And so you have to go in and think about, what emotions am I feeling and how they are affecting my trading? How does the impulsivity that comes into me when I feel fear or nervousness, or I have FOMO, which is the fear of missing out of, a potential trade, how do I react based on that? The whole thing with trading is you can feel all these emotions. I still feel all these emotions, but I don't let the emotions control me. That's the biggest thing when it comes to trading, is controlling your actions how you want. You don't have to be an emotionless robot to be successful at trading. It's actually the opposite. It's you need to feel all these emotions, but learn how to react properly to them. Change how you react to them. And instead of, revenge trading and taking, having massive blow up days or weeks where you jump in trades just based out of frustration, you instead stop yourself from doing that and say, hey, I need to just be done with trading for the day and move on, reset, and come back the next day and consistently wait for my pattern and strategy to show up. And so how you break out of this is you have to kind of figure out what your self-sabotage loop looks like. And so to walk you through what my self-sabotage loop is, so you can kind of see how it works, how it maybe, gives ideas to how yours works, and then we'll talk about how you can break out of it. And so how my self-sabotage loop worked was I always had a massive fear of being wrong with my trades. I was always scared that my trade would not work. That this one time that I'm getting in, the trade's not gonna work out. Even though trading it's like you're going to the casino, right? It's all percentage based. You're not gonna win every trade. Logically, I always knew, my win rate could be 50%, but I, make 3 times the amount that I lose. So every time, I lose a trade, let's say I lose $100, but every time I win a trade, I win $300. Well, at a 50% win rate, you're making consistent money over the long term. But when it comes down to trading, I would have kind of that narrow tunnel vision would come in. That fear would kind of make me just tunnel vision on this one trade, and the fear would overwhelm me and control my actions, and I would end up skipping the trade. And usually because, for me, most of the time when I showed up to trading, I was dialed in, focused, waiting for my strategy. And a lot of times my read would be pretty good. I would notice that pattern and it was a good trade. And so I would end up skipping a good trade, skipping out on, profits. I would then be frustrated because it was, it pissed me off that I missed a profitable trade and I really should have been in it. I knew I should have been in it. I just got a little scared, hesitated, and especially for me trading on, a smaller time frame like a 1 minute chart, things happen quickly. You have to take action right away. You can't kind of sit there on a higher time frame and kind of let the emotions kind of ease out a little bit and, jump in. A lot of times by the time, I get over that initial fear, the trade would be gone. The market would have already, shot up in the favor of that direction that I was thinking, and it would be too late. So then, I'm frustrated. I would continue to watch the charts because, I said, well, maybe another setup will show up, right? And so I would then FOMO or impulsively jump into a bad trade. It would start to set up, or it would, I'd cut a few corners, right? Like, let's say I have my 5-step entry checklist that I wait for every time. Well, instead, I get 4 out of 5. And I say, whatever, it's good enough. I just missed a trade. I gotta get in here. I'm not gonna miss another one. And so I would jump in, with FOMO, and that impulsivity would control me, and I'd jump in, and it would normally turn into a loss because, well, it's a trade I just shouldn't have been in anyway. And of course, then that loses. That's now 2 losses on the day, and I would then, be really frustrated. Sometimes it would be, worse than frustrated. There's going back to these, that there would be, some days it would turn into kind of hopelessness or desperation. If I'm kind of on a losing streak, it'd be just like, ugh, I keep doing this. I'm stuck in this cycle of constantly, blowing up my account or going on these losing streaks, and I can't seem to make things work, right? And then eventually after that, some days I would even revenge trade. I'd frustrate and take another loss. And eventually though, I would, be done for the day. I'd be like, okay, I have to be done. I gotta cut my losses. Things aren't working out. And I'd take a break, right? And I would essentially reset. Normally I'd, be done for the day, and I would reset, and it would come back as the next morning, and I'd be good to go. For me, I can reset over the night usually pretty well, feel refreshed and kind of focused again, ready to trade, and it would start that same loop over and over of that fear of being wrong, that a setup would come and I'd get nervous and I'd skip the trade. And so this was kind of that cycle that even though I had a good strategy, I would be stuck in, and it would stop me from becoming profitable. And so let's now talk about some actionable steps for you to break out of this self-sabotage loop. Now, the first thing is through this video, you have already started to build your awareness. You need to go through your trading and start to just realize, okay, what are my emotions? What are they doing? You know, is it FOMO that is messing me up? Is it, you know, nervousness? Is it greed? Go through and think about your trades and make a list of, you know, what's damaging your trading. And then you need to go in and say, okay, how am I reacting to those emotions? How are they affecting my trading? And how am I trading when I, you know, feel those emotions? Am I impulsively jumping into a trade, or am I stopping and not getting into a trade when I really should be? What you need to do is make a trading journal and start to track and build this list from your trading. Every time you take a trade, go in and write down your emotions of what you felt when you entered in on that trade, or what you felt when you were managing the trade. You know, did you get out too early of your trade because of fear, you didn't want to give up your profits, or you let the trade go on too long out of greed and you gave up way more than you should have because the trade came back against you. And initially, you kind of saw the market going up and you said, okay, I should probably get out here. But you kind of got money eyes and the euphoria were like, well, what if it just keeps going all the way up? Why would I want to get out here? But in reality, the trade, you saw the spot, maybe it was at a resistance zone up here, and instead it reversed right there and you would have got out at the tippity top. And then the next stages of that is, well, from understanding these reactions and building your awareness, you'll start to realize, okay, well, how do I want to react based on that? Most of the time, it's, the good default is, well, I want to follow my plan. If my plan says to jump in on a trade here, I jump in no matter what I feel. If I'm scared, that's okay, I accept it, and I jump in on the trade. That's how you overcome, your emotions controlling you and impulsively, either jumping you in on a trade or getting out too soon. And then of course, the last one is you start consistently reacting correctly. And what that kind of looks like is, here's your kind of normal cycle of, stuck in that fear of being wrong. For me, this was my cycle, right? Instead, I've created a new cycle, a better cycle that essentially helps me be profitable, and I will jump in the trades consistently. And essentially I'll see a setup, I'll be kind of nervous that it's maybe not going to work out. That fear of being wrong still comes up. Trading is still intense even when you've done it for years and years, because you're always increasing that size. It's always intense still, right? And so instead though, I'll feel that emotion, accept it, and say, well, I want to follow my plan anyway, and I take the trade. And so I take the trade, sometimes it doesn't work out, but a lot of the time I have shifted my mindset to say, well, me jumping in on a trade that sets up how I want, that's a good trade. It doesn't matter if it wins or loses. Instead, a successful trade for me is if it was a good trade setup. If I jumped in when I knew I should have, and when the patterns aligned with what I'm waiting for and looking for every day. And so from there, that helps me build confidence because I traded how I want to trade. If you're doing this and consistently executing through your emotions and you're still, not profitable, that just means you have to go back through your trading journal and tweak things. That's where, you really start to narrow down what's working and what isn't. A lot of the time, you will find that if you can take out a ton of the losing trades, or your ones that consistently lose, there's some common denominator of why. And if you take a lot of those out, and you can through, collecting that data and reviewing your journal, it'll drastically pump up your win rate and how much profit you're making consistently. And so from there, it makes that new cycle of, instead of, my muscle memory being to skip the trade, my now muscle memory and kind of mental pattern is to take a trade. And I'm now essentially, you could say, stuck in a cycle that is positively impacting my trading versus one that's negatively impacting my trading. So really take the time to think about this and how it is affecting you and your trading, because it's really gonna help you become consistently profitable. And make sure to get that list that I put together of the 75 essential trading lessons that I learned along the way of breaking myself out of these two loops, because it's really gonna help accelerate your process with that. You can get it either in the link in the description of this video right now, or with the QR code right here. And if you want to learn more about my 30-minute reversal strategy and the strategy I used and finally figured out that helped me become consistently profitable with only really 60 minutes a day in the morning, check out this video right here.